market has a funny way of luring everyone into thinking a certain way and then pulling the rug out, that even if we do hit a new high, it's going to probably be in the next couple of weeks, and then we'll start seeing a downturn over summer that will surprise a lot of people. This here, very clearly this low right here around 3,100, we would want to see that hold to maintain this bullish consolidation.
Hello and welcome back to Soar Financially, a channel where we discuss the macro to understand the micro. My name is Kai Hoffman. I'm the EdgeAR mining guy over on X, and of course, your host of this channel. And I'm looking forward to bringing back Gareth Soloway. He's a chief market strategist over at Verified Investing, somebody we love chatting with because he gives us he brings some realism to our program because he's a chart analyst, he's a chart technician, and he just tells us how it is. He looks at the charts and gives us what are the trends, what is happening, instead of just theory. So we really enjoyed chatting with him. Lots prepared for this conversation because lots to talk about. Of course, we need to talk about that massive bounce back in the S&P 500. We of course need to talk about the move in gold, and also how stable is gold right now. Where's the trend? Is it up? Is it down? What does it look like, of course? And we want to talk about oil. It has huge implications on inflation, so I've asked Garrett to prepare that as well, because we need to figure out where's the journey headed, what does it mean, and what can we expect, because it also has implications indirectly on Fed decisions coming up here as well. So big topics that we need to discuss. But before I switch over to my guest, hit that like and subscribe button. Helps us out tremendously, and it's a free way to support our channel. Really appreciate you doing that. Now, Garrett, thank you so much for joining us again. It's good to see you.
Oh, it's good to see you too. Thanks for having me back.
Of course. No, I really love having chart technicians on because, as I said, it brings a bit of realism and pragmatism to what we're doing over here. A lot of theory. Let's look at some charts, Gareth.
Yeah. But I was just going to say, and I love that, the realism is that, and I'll just say this to start us out, is that, the charts are always right. And that's something that I always say is like, we all have our predisposed notions. Gold should go here, gold should go there. But really, when it comes down to it, the charts are what tell us. And that keeps us grounded from making these ridiculous predictions. You hear about the Bitcoin by next month will be 1 million or something like that. But in reality, the charts guide us.
Why did you have to say Bitcoin? No, the comments will be flooded, Gareth. No. All good, but I know what you mean. It's the same with gold to 40,000 or 10,000 or whatever it is. Doesn't really matter. Let's look at some realities here. Maybe let's frame it. Maybe get a bit of a sense of where's the market at right now? Like, where are we at? A lot of uncertainty, of course, in the first 100 days of the Trump presidency. It seems a lot calmer out there. That's my gut feel. What do the charts tell you, Gareth?
Yeah, so we definitely have seen the markets have a tremendous bounce. And again, if we take a look at the S&P here, the S&P has now staged essentially a 22+% bounce just since April 7th, right? So the high here was about 23%. We back it off since we had that little bit of a pullback, and we are currently up 22%. Now, this is a very sharp rally off the lows. We would call this in technical analysis a V bottom. Now, usually V bottoms are very, very bullish, but this one has me a little bit more concerned. It's almost too easy. And one of the issues I have with this is that the market has done V bottoms almost nonstop. For instance, if we go back to the August decline in 2024, look at this decline here. It was a tremendous decline where that last move down was very, very scary. What happened here? We had a V bottom. Here was your July into August of 2024, V bottom. And if we even go back to COVID, right? COVID was a V bottom. And what ends up happening here is that investors start to just assume when we have a big dip, whether it's COVID related, whether it's economic related, whether it's Fed policy or even tariff related, that, well, don't worry about it. Just buy it both hands, just dive right in, because you'll get new all-time highs within a couple months, because that is what has happened now since really, going back to COVID. And the problem is the market has a funny way of luring everyone into thinking a certain way and then pulling the rug out when everyone is in alignment like that. And so I would just caution to be a little careful, as you can't ignore the fact that inflation is still above the 2% mandate. You have tariffs, which are now, even though we've seen reduction in tariffs, China's still getting hammered with 30% tariffs, or we're hammering them with 30% tariffs. That is still a big hike and a big issue to inflation. And then you throw in a negative GDP report that came in the first quarter, and we're not far away from potentially being in a recession. All right. So again, there are issues here in the underbelly, but the retail investor has been diving into this market. In fact, if you look at money flow, the institutions are still sitting mostly on the sidelines. It's retail that has been hammering this market or buying this market to the upside. And that's another concerning thing, that the big money has not started to get back in yet.
What do you think the trigger was? Last Monday, I just mentioned to you before hitting the record button, was apparently the biggest day, like half day before 12 p.m. of retail buying in the U.S. on the S&P 500, $4 billion of retail buying. What was a significant trigger? I thought for me, it was pretty much a non-event day. Like there wasn't much going on. So I'm curious, like why did they jump in hand over fist? Like what triggered that hand to wallet response here?
Yeah, I think it's been a culmination of just the outlook on tariffs getting a little less bad. And I think a lot of the younger generations, which joined in kind of right around COVID, is when a lot of people that hadn't invested prior decided to get into the market. And so they're really seeing that, oh my goodness, this market had pulled back significantly, right? And we're looking at, again, when you drop 20 to 30% on the NASDAQ or the S&P, historically, at least from the point where a lot of these Robinhood type investors have been in the market, that's been all you've gotten. And then the markets again have turned around. And so you're getting to this point where you're getting the greed, the FOMO, the fear of missing out, to really get the point where people just rush in and these younger generations dive in. They don't remember, and listen, I'm not super old, but I still went through 08, 09. I still went through the .com collapse. I mean, the NASDAQ, we have to remember, in the .com collapse did not make new all-time highs for almost 15 years. And so in that respect, people that are newer investors, they haven't gone through long-term bear markets. And I think there's this tendency to just say, hey, this is the best we're going to get. We're not getting a deeper pullback. The Fed will come out with bazookas. The government will do its thing, and we're going to be off to the races again.
Pardon the interruption. Here's a quick word from our sponsor. Looking for the next big lithium play? Meet EMP Metals, the highest grade lithium brine project in Canada. With clean, shallow brines and grades up to 259 milligrams per liter, EMP Metals is positioned for fast, low-cost production in Saskatchewan, Canada's #1 mining jurisdiction. They're near production and have a substantial resource. Meanwhile, big players like ExxonMobil have been eyeing the region. Lithium demand is exploding. Don't miss this high-grade near-term opportunity. Ticker symbol on the CSE is EMPS, or on the OTCQB, EMPPF. Check out EMP Metals today, and of course, this is a paid promotional segment and most definitely not investment advice. Always do your own due diligence before making investment decisions. Now, let's get back into the conversation. Do you see a shift in investing, though, like within the S&P 500? Like, are the products change or the stocks that they're throwing money at changing? Like, it used to be the Max 7, obviously, and I'm assuming NVIDIA is still at the forefront of everything here. But do you see a bit of a shift, perhaps? Like, I'm just trying to see if there's anything changing, actually.
Yeah, I mean, I think there's always an evolving kind of hot group of stocks. Right now, I think Robinhood stock is hot. I mean, anything that has a little leg into crypto, MicroStrategies, right? Just today, I think Trump's company, he announced that they were going to be selling $3 billion in equity or essentially raising capital to be able to buy crypto. So there's definitely this kind of eye amongst the younger generations to focus on the stocks that have exposure to this new robust industry. Now, again, what I learned is that when the .coms were the new industry, yeah, they had great moves, and then they all had collapses. So I would just always offer that little bit of caution, even though a lot of people will call me an old fogey or a fool for saying that. But again, I've just been through it. I've lost a lot of money in these type of collapses, and so I've learned my lesson. But I think that's really what it is there's a hot group on Reddit, on Wall Street Bets, and whatever group that they're focusing on, those are the ones. For instance, another group would be the quantum computing stocks. This new technology, we're also talking about the autonomous driving stocks. Tesla is still a hot commodity amongst younger investors that are out there looking for the next big thing.
Are the Max 7 still a thing? It sounds like we're talking 2030 here, but it was just last week that the Max 7 were the hottest thing on town, right?
Yeah, the Mag 7 are still hot, but the Mag 7 aren't being focused on by retail as much as aside from like index buying, right? So remember, because the Mag 7 make up literally 50% of the NASDAQ 100 and about 25 to 30% of the S&P, if anyone ever buys the SPY, the tracking ETF for the S&P, automatically 25 to 30 cents of that dollar that goes in automatically goes into the Magnificent Seven. And so that's why those stocks are still doing well. Microsoft's really done well. We've seen Apple falter a little bit because they're on the front lines of the Trump administration on moving iPhone production to the US and also the tariffs with China. But aside from that, I mean, Meta's done very well until the recent pullback. We've seen a lot of interest still there, but that's more from index buying.
Like, what is the market reacting to the most these days? Like, you just mentioned Apple. That's sort of prompting the question, because I saw the news as well, like 25% tariffs on iPhones that are not made in the U.S., which is every single iPhone, obviously. Yeah. But my point is the stock was down pre-market 2%. Nobody cared. Right. Like, that's a normal move. Like, that's nothing out of the ordinary. What do you make of that? Like, why didn't the market react more? I haven't looked at it since, but it was a 2% move. Like, I'd expect 10% drop or so, but the market just shrugged it off.
Yeah, and I think there's something happening here where initially when Trump surprised everyone with the dramatic tariffs that were labeled across the board, people were kind of left in shock. And that's when we saw that massive decline in the S&P 500. But since then, he started to roll these back, and he'll make these threats, right? He'll say 25% tariffs on Apple, 50% on the EU. And then what we saw with the EU threat, which was just on this past Friday, by Sunday, he had already rolled that back and gone back to, oh, no, we'll wait till the normal July 9th deadline that we had already set. And I think people feel the same way about Apple, right? Is that, he's threatening this, but ultimately he will go back on it because he doesn't want to kill the market. He doesn't want to kill one of the leaders or the champions of the US market, being Apple. And so I think these threats are starting to look like they don't have teeth, and the market is sniffing that out and just saying, hey, listen, if he does this, just buy the dip, it'll go right back up.
Yeah, the market is trading, or taco trading, the U.S. right now. Yeah. Trump always chickens out. Like, it's an interesting term. You know what my worry is? That he actually hears that and all of a sudden starts to react and is like, okay, guys, we're done with this. Like,
well, that's going to be a risk, right? So the markets are starting to price in that he won't do anything, which means the markets are actually vulnerable if he sticks to his guns at some point. And we do have these deadlines coming up in June and July, or late June into July, where there has to be supposedly deals done. The question, again, in my mind, and this is what the market is thinking, is saying, okay, if a deal isn't done, will he come out and say, oh, we're close, so we're going to extend it by 30 days, and essentially moving the goalpost. And that's what the market is supposed to, or starting to believe. The question is, does he hold firm? And then we all get the shock of a big down move in the markets.
Yeah, I remember watching Bloomberg with one eye the other day, right before the Liberation Day. There's like, whatever he announces on April 2nd, April 3rd, nobody will care about. While he came out with a big shocking announcement. So I'm expecting something similar to happen. Something where he's like, okay, guys, you got to take me serious.
That's right.
And that's regardless of where you stand politically.
And he has to, in a weird way, if he starts to realize that the markets aren't taking him seriously, he almost has to reestablish dominance. It's almost like the Federal Reserve, right? The Federal Reserve for the longest time was kind of backpedaling and doing this and this, and no one believed that they were ever going to hike rates. And then they finally had to be like, no, we're going to do this, and they do it. And then the market's saying, oh, okay, well, they're serious about this now, and they'll kind of make it into the equation of how valuation should be. But again, right now we are seeing the Trump effect kind of losing, at least the power of the tariff losing its luster.
Absolutely. You were talking about GDP growth numbers and recession knocking on our doors. It's just around the corner. We always chat Russell 2000 when I have you on, Gareth. More of the real economy outside the hype stocks, of course. Let's take a look. Like, what's the real economy telling us here, Gareth?
Yeah, so if we look at the Russell, this is the IWM chart, you can certainly see that compared to the S&P and the NASDAQ, it is a far cry from all-time highs. I think the S&P is only about, give or take 5% from its all-time highs, yet the Russell is 18% from its all-time highs. And again, this is partially regional banks, but also smaller companies, kind of that run-of-your-mill, not the Magnificent Seven, if you will. And so it definitely shows us that there is weakness. Now, what's interesting here is, look at this trend line right here on the IWM at around 209.50. This is a level I'm watching very closely, because you might even have what we call an inverse head and shoulders here, that if you get through this line, you should have a bigger move on the IWM, possibly as high as around 230. So it is something that we're just keeping an eye on as analysts here of the charts, just watching this. Now, right now we're below it, so there's no guarantees we break it. But if we do, this would be considered a breakout with a significant amount of upside, probably at least up to here on the charts. And so again, right now, conservative, being careful on the Russell. It hasn't broken, but very closely watching that level.
Gareth, I forgot to ask you about the S&P 500. Where do you see it going? Like, we got to come back before we move too far away from it real quick. Apologize for that.
Yeah.
But where do you see the S&P 500? Because you haven't put any trend lines or anything on it. Let's see where it's headed. We've only looked at it retrospectively. Let's do a bit of forward looking here.
Yeah, so in terms of the S&P, I still think there's a chance that they could push us back to the all-time high. I don't think there's much upside past, but if you're looking for being a contrarian, where do you get the most people? Where do you get retail to fully put in their last dollars into the market thinking they can't lose? And to do that, what you would do is get the markets to break briefly the previous all-time high right up here. So that would be a level that I think is very doable. And we were just talking about percentages. If we look at where we are, that's only a 3.9% move higher, which again, I mean, heck, we're up. What are we up today? We're up 2% almost on the S&P. So it does not take a big move from here to get to that level. And I think investors should just be ready for that. The other thing to keep in mind here is that we're still dealing with major resistance points. And one of these lines that I love showing is this logarithmic trend line going back to the Great Depression high here. So this is 1929 before the Great Depression. This was the dot-com high before the big collapse. And look at where we are. So even if we go back there and we briefly make a higher high, let's say we go to 6,200 on the S&P, this line has proven that it causes big pullbacks. And you could even see, I mean, even here, we saw a significant drawdown, even though we've recovered very quickly. So you'd have to assume that if we get to that level, we'd see another big decline, maybe even better. And then lastly, I love this chart. So is it possible for the NASDAQ to go all the way back up and make a new all-time high, maybe around 20,800, which would be a slight move above the previous all-time highs? It certainly is. But look at the dramatic nature of every time we hit this parallel channel, COVID low, bear market low. Eventually, I still think we're going to this end target here. And so whether we go up to that level and then pull back down there, or whether we don't quite get there, I still think, again, upside maybe, a little bit more, maybe new all-time highs briefly for a small amount of time. And then you're looking at some bigger correction, which we all know. I mean, there's so many possibilities. It could be inflation. It could be stagflation. It could be, geopolitical issues. It could be, tariffs. There's so many possibilities. But my guess is it's going to be a combination of slightly elevated inflation with a recession. Stagflation, I think, is going to come.
Yeah, that's looking very, very likely. Gareth, maybe premature question to ask. I should have asked it at the end of our conversation, but seasonality. It's the end of May here, and you know the famous saying, sell in May, go away, and come back in September for a time to remember or something. I always butcher that part.
Yeah.
But what do you make of seasonality here? Is it different this time?
I don't believe that seasonality will be as significant this year because there's too many key events, mainly tariffs and consistent news, that are going to keep at least the big institutions anchored into the markets. And I think even retail investors are going to be watching this very closely. They know these deadlines are coming up. They know we're watching for Fed potentially to cut rates later this year. And so I do think that they'll be more cued in. So I would actually think that even if we do hit a new high, it's going to probably be in the next couple of weeks. And then we'll start seeing a downturn over summer that will surprise a lot of people.
Since we're on the topic of dates and timing a little bit, what are some of the dates you're watching in your calendar regularly, something that could provide a potential shock to the charts here?
Yeah, so there's a big cycle date coming up in mid-June, which is right after that deadline for tariffs with Europe. So again, whether or not we peak, maybe get a rally on that news right into that, and then that's the top being put in. Maybe that's where we make our new all-time high on the S&P 500 before a reversal. It's hard to know, but a cycle date, that is a cycle date based on many, many calculations that are coming up with that point using GAN and some other things. So again, just keep an eye on that mid-June, basically about 3 weeks from now, period.
No, I appreciate that, Gareth. You touched on the Fed, of course. We got Fed minutes coming out this week, I think tomorrow. Personally, I'm not expecting much, so let's call it a nothing burger here. But my point about the Fed is they're always data dependent, they claim, and one input they look at is inflation data, of course, and one commodity that impacts inflation quite a bit is oil. Great segue, wasn't it? But we got to talk oil here, Gareth. It's really important to the whole administration in the White House. It makes a lot of difference in the economic policy, of course. What are your thoughts on the gold price right now, oil price right now, Gareth?
Yeah, and so one of the things that's really struck me about oil here is that for the longest time, and I can even extend this out further here, we were basically hovering on top. So you could see that we go back, and this was that major collapse in 2020, right, where oil just collapsed to the downside and then recovered. Ever since it recovered and it regained this level here, the $65, $66 area, you could see it hit here, pulled back, then rallied up. And then basically we've been bouncing on top of this line for the last arguably 4 to 5 years. Now, what happened recently is the concern, right? We broke to the downside and we've now been consolidating underneath. This is known in technical analysis as bearish consolidation with essentially major resistance now. Remember, when support, this was support all the way back multiple years. Once support breaks in technical analysis, it becomes major resistance. And so what we know is that it's now bearish consolidation with major resistance just above it. That implies that oil is going to go lower here. Now, is that going to be positive for inflation? The answer is yes. But the kicker is, would that have any impact on tariff inflation? And the answer is no. So this is where it gets kind of confusing because we might all be paying less at the pump to fill up our cars. But at the same time, we could also be seeing the prices of everything else going up even with that.
I don't know. It's a weird question to ask, Gareth, but like, how much would oil have to drop to sort of negate the tariff inflation? Have you thought about that? Like, because it feels like it's being used as a tool. I keep calling oil or the oil price QE for the people as well to sort of mitigate some of the cost. Have you put any thought into that? I'm just curious, just random.
Yeah, I haven't put in thought into what it would take for oil to totally negate it, because you would have to think that, remember, tariffs are being imposed on goods at a flat amount, meaning that, like, you know, if it's an iPhone and it's 25%, that's 25% on top of an iPhone versus oil is one component, right? It's the energy component, or it goes into plastics and stuff, but it's just one component of those other factors. So I would think oil would have to go very, very low. I do have a downside target, though, and probably by the end of this year of around $43 a barrel. So again, just keep that in the back of your mind. I would think that we see 43 by end of year this year.
That would have a massive impact on inflation, be actually deflationary. We'll have to see how it goes. But appreciate your thoughts there, Gareth.
One other thing I would just point out is, and this is really interesting. So we know Trump has been about, you know, drill, baby, drill. But if you've noticed, OPEC is now in the process of continuing to up output, right? And you'd almost think that they wouldn't do that. Why aren't they cutting? Why aren't they trying to push oil prices up? The kicker is this, right? Is that OPEC is realizing that the U.S. can produce as much oil as the world needs. Essentially, we're essentially independent, and we're now exporting oil. We're net exporters. And so what OPEC is doing is they're trying to drive oil's price down to knock out production in the U.S. And so remember, OPEC probably produces oil a barrel for $5 to, let's say, $20 a barrel. And so anything above that is profit. The U.S. in general, I don't know the exact number, but I'm guessing it's between $40 to $50 a barrel. If the OPEC can drive the price lower, they can literally take out the U.S. production, or at least a good chunk of it, leaving them to basically fill that void. I think that's what OPEC is trying to do.
Yeah. No, it's interesting because other commentary I've heard is from the geopolitical side, driving oil price lower to put pressure on Russia, because the sanctions say, well, you can't sell for more than $60. We all know the sanctions don't really work, so we're trying to apply different pressure points, obviously. Gareth, before we talk precious metals, we got to talk one more base metal here with you. That's copper, because on the recession trend or thematic here, what has got Dr. Copper telling us, and is the EV story finally kicking in here?
Yeah, look at this on copper. So copper, for me at least, is still in what we would consider to be a bearish consolidation mode here. So I'm not buying this, copper's going to rip higher. This was the run up into the tariffs, right? Into the kind of the tariffs were driving prices of copper up. Then we had the big collapse here when we saw the April collapse in the stock market. We rebounded, and now we're just chopping sideways, and we're kind of stuck in this little lows here, highs right up here, and you can see copper's coming in. And so at least for me, I know everyone's talking about, hey, is there going to be expansion in the economy? Are things going to get better? Copper, to me, at this point, is not telling me that that's going to happen. And I still have a negative bias on copper, probably a retest of the $4 level down here.
Now, interesting. Like, lots of different factors playing into that. Here, China stockpiling, the economy in China, especially real estate, doing better, and a lot of stimulus out of Europe as well.
That's right.
Germany in
That's right.
particular. So,
Yeah, and I've heard, yeah, Germany's doing very, very well. I heard this weekend that they just talked, or at least their head banks, I think it was Deutsche Bank, said that likely there's no recession there. And I wonder about a lot of this is how much is their increase spending on defense, right? We've talked about how defensive spending, it's now stimulative, where they're having to start spending more and more money, and they can kickstart the European economy actually. And we'll see if that happens, but it is interesting.
oh, 100%. Yeah, I hope they invest a lot of money in infrastructure here, Gareth, because our train system, for example, is falling apart. 80 years post World War II, I think it's natural that stuff starts to break after a while, but you got to reinvest and keep it going. So,
That's right.
natural progression of things. I'm being a bit flippant today, but drum roll, we got to talk gold and precious metals here, Gareth. We haven't talked for a while, so gold has moved tremendously from $2,700 to like $3,500 for at least a few minutes here, but it's hanging in there. Like personally, and I've said it on this channel, I think it was back in February, I felt like gold was a little overhyped. We had Joe Rogan, Elon Musk, even Scott Besson and others talking about gold, auditing Fort Knox. A lot of hype around the precious metal here, yet it's hanging in there. So let's take a look at the chart here, Gareth. What is gold telling us?
Yeah, so gold right now, and we could see this is the first time really since the start of the run in early 2025 where it just kind of went nonstop to the upside, a couple little pullbacks along the way. But this is now the first period where we've actually seen it making kind of lower highs and short-term lower lows, right? So it's the first period of what we would consider to be digestion or consolidation in the chart. Now, one of the things that I've been focusing on is this line here, this upsloping trend line here, and then this pivot top. And notice how we came down recently. We pierced this line here, and then we rallied up. And then look at where we got rejected today. We hit this on Friday. We came right back in today. Now, overall, a lot of people would say lower highs, lower lows. Is this a bear, essentially a bearish move or the beginning of a down trend? The answer is you still have low, higher, a higher high, or higher low, higher low, higher low. So the longer term uptrend is still intact. This is, again, would be viewed as bullish consolidation, meaning that it's consolidating before another move to the upside. The only thing that you have to watch as a technician, and remember, I'm a big gold fan. I love gold, and I still think it's going higher. But as a technician, I always have to be aware that there are levels that need to hold. This here, very clearly this low, right here around 3,100, we would want to see that hold to maintain this bullish consolidation. And then eventually we want to see a break of this trend line, which then should send it back to 3,500 and beyond. But right now, listen, the chart remains bullish. I mean, it's consolidating, but it's consolidating in a bull flag. It looks like it wants to eventually break to the upside. And if we think about it logically, right, you have all the factors, right? This new tax trade bill or whatever they're working on in Congress. I mean, supposedly it was going to cut all this spending, and now they're kind of backpedaling and saying, okay, maybe not so many cuts, and let's expand this and give more tax cuts. And ultimately, we're hearing now that this is going to add trillions and trillions and trillions of debt, which is just more fodder for gold to go higher, right? These alternative, stores of value. So that's again, those factors I think continue to be good for gold.
Yeah, I keep having a harder and harder time coming up with bear cases for gold.
Yeah.
Like, they're different story.
I'll tell you one thing though. I'll tell you, and like I right now, I don't know if I mentioned this the last time we were on, but Palladium, I am a huge fan right now. Take a look at this chart here. So Palladium, number one, look at where it is compared to gold, right? So gold's at all-time highs. Gold's like all the way up here at $3,300 a barrel, $3,300 an ounce. And then we have Palladium, which is down basically at multi-year lows. And if you look at Palladium in terms of gold, it's at one of the lowest levels in recent history. Now, again, you would say, normal people would say to me, okay, well, Palladium is industrial metal. It's used in catalytic converters, and we're going more towards EVs and all this stuff. Absolutely correct. But I would make a case that this is where smart money that's looking for an alternative that doesn't want to pay up for gold would say, hey, listen, Palladium is 30 times rarer than gold. Maybe there's a case here to be made that if you want to offset fiat risk, you look at something that is not run yet but is rarer than the metal gold itself. To me, it's very interesting. And then just look at this here. If we take a look at the chart, you have high, high, and high, right? And then what just happened? We got a breakout, and it's retracing. If it gets right down here, this is a buy. And on a technical analysis basis, we should go like this, and we should go higher. So Palladium, again, it's just an alternative. It's another idea for your viewers out there. It looks really interesting here from a breakout, but also from a alternative, investment on a rare metal.
No, fantastic. I really appreciate that. It's an interesting one, especially I keep hearing more and more about internal combustion engine sales still being allowed past 2030, past 2035, especially here in the EU. So I think the way to go is hybrid, personally. So we'll have to see, but hybrids need catalytic converters.
They do.
We'll have to see where that goes. Gareth, I can't let you go before asking about silver. That's the last one we need to talk about. Gold-silver ratio at 100. What is that telling you?
Yeah, that's amazing, first of all. So number one, I like silver down here, and I'll tell you why. You got this V bottom in silver, and then you went into this period of consolidation. You can see the lows here, the highs here, and we have just recently broken out. So you've broken out. Now, there is going to be some resistance around 34.50. That just comes from this high pivot to this high pivot. But I think that you're setting up for a bigger move in silver. It's lagged tremendously. It's starting to get, exciting here. And if we can break this 34.50 area, I think you could be headed to 38 over the next month or two on silver. So there's some good upside here. I do like the chart. The only thing, again, we always talk about, okay, well, how does my pattern setup fail? I wouldn't want to see silver getting back below this 31 level. If it gets below 31, it's probably going back to 28. But as long as it holds in this range, upside bullish bias on silver.
Perfect. Gareth, before I let you go, just quickly, back testing, do you do any correlations to make sure, okay, what I'm saying here is silver to 38, does it make sense versus the S&P, or does it make sense versus oil, for example, is an interesting one, because oil versus gold, I've heard a few times now. Does that make sense? Are you looking at those correlations?
You do look at them as part of the equation, but as a pure technician of the chart itself, you're really looking for what we call price pattern in time. So patterns replicate over and over again, as do prices. Now, what we do know is that certain things can get outweighed or get kind of wacky in the system, whether it's hype on gold or hype on this or whatever it may be. So those type of past histories can be a little offset, but there's usually an equilibrium that they come back into. So you want to be very aware of them, but at the same time, for me, it's all about that price pattern and time factor on the chart.
Fantastic. Gareth, wonderful insights. Really appreciate you coming on again. A bit of a reality check. Always like talking charts as well. A bit of a different perspective on what we usually talk about here. So, Gareth, where can we send our audience if they don't know where to find you by now?
Yeah, just check out verifiedinvesting.com. It's a place where it's all about charts. So if you like probability-based investing and trading, that's where you go. No hype, no nonsense. The chart tells us what it is, and that's what we talk about there. So again, you may not like what we have to say, but it's on the honest, based on probability, most likely outcome, and that's what the charts give us. So check us out there.
Great, Gareth. As long as you keep telling us gold is going higher, we'll love you. Okay.
Nice.
No, being a bit trying to be funny here. Okay,
it is funny. It is great. I totally get it. Trust me. People want to hear what they want to hear, and I don't blame them for that. And I am bullish on gold.
I live in my own little bubble, Gareth. So really appreciate you coming on. It's great to chat as always. Thanks so much for your time. Everybody else, thank you so much for tuning in to Soar Financially. Much appreciate the support. As I said, we just broke through 75,000 subscribers. It means a lot to us. It means that our content is valuable to you. If you have any form of improvement, anything we should change besides my yapping today, felt like I was talking too much, but leave it down below. We do want to hear from you. We do take criticism and we take it into consideration, and we try to improve as we do this for you. Thank you so much for tuning in. Please hit that like and subscribe button. It helps us out tremendously. Thank you so much, and we'll be back with lots more. Take care out there.